Alright, what's up everybody? Welcome back to RoyalBluFX. In today's video, we're going to talk about Chock fakeouts, okay? Alright, so the reason why I want to talk about what a Chock fakeout is because a lot of times when we're trading, we see an area of supply or demand or an area of where accumulation and distribution happens, and then there's an area where prices is just zigzagging the whole way through, and you're wondering what the heck is going on. You have this area where price is chalking, right? It's showing us the change of character, but then we're look to trade that chock, and then we get stomped out at the end of the day, right? So I'm going to explain what all that is in this video. All right, so first things first, what is a chock fake out? All right, so have you ever been in a situation where price is going bearish like this, right? And then all of a sudden you're tapping in an area of demand like this. All right, and then we all understand, obviously, when prices reach a demand, we wait for prices to break a high like this, and then it forms the chock, right? Then all of a sudden, price breaks a low, and you're like, oh shoot, okay, I thought my buy was right here at this area, right at this demand. That's supposed to be an arrow, excuse me. Okay, and then all of a sudden, price shoots right back up again like this, breaking a new high, and you're thinking to yourself, okay, what's going on here? I don't understand. I thought we were a buy. Right, and then all of a sudden price comes back down again, then breaks another low, right, then goes right back up again, breaks a new high, and it's all playing with your mind, right? All this this whole formation like this, right? And you're thinking to yourself, what is going on? I don't know what I'm doing here. Now I'm lost. I don't know if the trend is up or down, right? This is called accumulation, right? Accumulation in the market. So what it's also doing is price is expanding, right? It's in a consolidation period, as we all know, but it's also expanding. It's trying to take out liquidity from every high and low, right? Trying to take out and sweep everyone clearly from each high and low right over here, right? And then price is trying to actually go into a new direction, right? It's trying to find its new direction to tell everyone, hey, this is really the trend. It's not this, right? So for example, if prices go bearish like this, right, prices have decided, or the markets have decided that price should go bearish based off its sort of behavior that's happening here, right? And so a lot of the times when a lot of traders trade this chock formation, right, you get stomped out, you get stomped out, you get stomped out until price decides to truly find its new direction, right? Now, trading the chock isn't a bad thing. It just depends on how you trade this sort of how you trade structure at the end of the day. Okay, we all understand that chock is a type of structure. It's just, a fancy word for change of direction, right? So if we understand how structure works, then we can most likely avoid this sort of scenario, right? In our cases at Royal Blue, we always wait for 2 breaks of structures to identify where the true direction is. You don't always have to be first in the market. You can always wait for the second break of structure and wait for that retracement for the next follow-up move, right? So in this case, this would be obviously a very bad clause for somebody to ever be in, right? Because you'd have multiple losses, and at the end of the day, you're like, oh gosh, I'm just giving up. I lost most of my money or whatever. I lost, a lot of trades. I'm just giving up, right? But fear not, because we're going to show you guys how to avoid this scenario here, okay? So so let's delete this over here, and we're going to show you guys how it's done. So obviously, let me delete this right here, right there. All right, so let's start fresh here. Okay, so when prices are going bearish like this, okay, something like this. Again, we're going to place our demand zone like this. Okay, if I can actually just push this smaller here. There you go. All right, and when prices are doing this, what we're looking for is that first break to go like this, right? Once that first high goes off like this, okay, then we wait for prices to retrace, obviously, we're waiting for prices to respect this area of demand. If price does that and gives us another break, that's obviously the safer move that we're looking for in terms of trading this this scenario, right? Now, obviously, when you're playing 2 types of structures, this tells us that prices are, in fact, bullish, that prices are wanting to go, bullish in that intended direction, right? If we had just this one break of structure, say, for example, like this, right? And then prices come bearish like this, right? And you don't know if prices are going to go bullish from here. Sometimes there's that scenario where you just don't understand if prices are going to go bullish, because obviously you're looking to buy it right at this demand area here, right? And then if prices happen to do this, right, prices kind of tease you a little bit, go up a bit, and then go bearish like this. And you're thinking to yourself, but I was told to buy off at Chochs, right? Well, here's the funny part about this, okay? In order to understand what's happening here at demand, we have to understand what's happening already, that has happened already here, where price was pushing bullish here and then supply was coming to take over. Okay, so if prices are coming to take off from a supply zone like this, right, we can see that there's a potential area here that price hasn't been mitigated yet, right over here at supply. So therefore, what price is doing here at this demand is coming to break this, break this high here, right? Breaking up this high, taking out liquidity. This may be inducement in the market, then mitigating this area of supply zone just like this, and then pushing price bearish, right? So this is why I'm telling you guys, that it's very dangerous to trade Chochs sometimes if you don't understand what is happening, right? And we can always avoid these messes by simply just waiting for those two breaks of structures, like I was giving to you guys, like this, for example, right? Something like this, right, like that. And there's obviously different scenarios that we trade in the market at RoyalBluFX that can take us and make us avoid this sort of accumulation trap in the markets, right? Obviously, we teach that in our RoyalBluFX course. This is just one way to show you guys how to avoid this accumulation trap right after these two breaks of structures, so something like that. Okay, so the whole point of this video isn't to scare you, to tell you not to take Chochs, not to trade Chochs, right? But it's to use your common sense to think about, what is more safer when I look for trades, for entries, right? Am I going to take the first break of structure, or am I going to take the second break of structure? Okay, so obviously we understand if we take the first break of structure, that the first break of structure may be just a liquidity grab from the highs, right? And then taking price bearish, right? So it'll look something like this, obviously, going back to that same scenario where we're looking to, where price is selling off like this. If that break of structure happens, something like that, this could easily be just a liquidity grab from the highs here, an inducement right over here, right, mitigating something above here, right, and then taking price bearish like this. So again, this is why I want you guys to be careful. Another thing is, obviously, whenever we're looking to trade, right, we always have the tendency to look to enter in right away. We're always thinking about, the fear of missing out a trade and so forth and so on. And the whole point of that is, obviously, it's very dangerous, because what we need to be thinking as traders is risk before reward, right? Is my money going to be safe to take this trade and to take advantage of this trade and profit from it correctly, right? So if that first break of structure tells you to say, hey, okay, this looks good enough for me to trade, then so be it, right? I can take that buy, right? And eventually, you may be stomped out, right? And then you would try and look for another entry coming in like this, right? And then slowly looking for prices to go bullish like this, right? But a lot of the times, right, when we're looking at the markets, okay, at RoyalBluFX, what we're looking for is good order flow, healthy order flow, right? If you don't know what healthy order flow is, please refer to one of our links over here. I'm going to have a little banner go across over here in this video. But you need to be looking for healthy order flow, or at least good order flow, because order flow tells us and guarantees us, or at least gives us some sort of a guarantee that price is moving in that intended direction. All right, so if we see something like this, there's a chalk like this, all right, and you can see order flow like this, pushing bullish. We see countless order flow like this. This is telling us that price is pushing bullish, right? You can see that this this high here failed to take out this low, but you can see this momentum pushing bullish here, and therefore now you can start looking for entries in the market, whether it be here or here, and then taking advantage of this trade pushing bullish. Right, so that's just that's probably one of our second scenarios that you can be looking for entries in something like this, right? To avoid this huge accumulation schematic that happens, right? These fake out Chochs, something like this, right? That we don't like, right? And so again, like I said, once you guys figure this out, once you understand that this accumulation and distribution schematic happen, you need to be able to avoid this clearly. So I'm going to be showing you guys in on a live chart example how to avoid this clearly, and just kind of show you and run down some examples to show you in terms of how to enter these potentially, how to avoid them, and so forth and so on. Here we are on a live chart example. Let's go in and dive deep in this live chart example, and we'll show you what we're talking about. All right, so let's just go anywhere. Let's just go here, for example, down here. Okay, and then this usually obviously happens at an area of accumulation or distribution. So right here, we're going to be working off an area of accumulation right here. We're going to drop down to the 15-minute right over here. Okay, and just notice when we're looking for prices when we're looking to enter, prices typically do this a lot of the times. So let's just play the market here, and we're going to wait for prices to give us a chock. Okay, so far we're seeing price bearish here, and then quickly playing this out. Hold on, my internet's a little bit slow here. Right over here. Okay, chocks haven't happened yet. All right, we're still looking for prices to go bullish here. Okay, let's stop right here for a second. Okay, right over here. Prices right over here has given us a chock, right? Something like right over there. Excuse me, this is going fast for no reason. My internet's lagging a little bit. You can see it right here. When we were given a chock right here, your ideal entry would have been right over here, right? And then notice how price comes out and stomps you out, right? So this is just one example, obviously. And then when you look over here, right, you get another chock, okay. And then right over here, you would have been able to enter just fine, right? And then now our anticipation would be to hold this trade till we hit this high over here, right? Now, if you zoom out just a bit, notice how we haven't broken this high, right? So there's no guarantee that this low is going to break this high just yet. But let's zoom in and you'll see what I'm talking about. Okay, so price is going bullish here. We are lagging just a little bit. Give me some time here for a second. Okay, price is pushing bullish. Okay, it's giving us what we want. All right, and all of a sudden, prices are going bearish here, right? Just look at this, right? All of a sudden, you would have either broken even on this trade or probably lost this trade, depending on how you control your risk, right? So something like this, if you entered from this low here, right, looking to target that extreme high, something like that, right? This would have been a bad entry because of the chock, right? There we go, right? Now you might think to yourself, okay, well, RoyalBluFX, I do see another chock there, right? Something like that and like that. Now I'm looking to enter this one, right? I'm looking to enter this this low right over here, right? And once you enter it, you were taken out, right? All because you're not understanding what is actually happening here. It's accumulating orders. It's taking out every buyer and seller that is here at this extreme low, at this area of demand, right? And then all of a sudden, before you know it, you either give out and you say, okay, I quit. I'm not taking any trades here anymore. Whatever. I'll just let the market do whatever. And then before you know it, prices are just going bullish from here. Hold on a second. Hold on. Okay. Anyway. My internet again is lagging, guys. Forgive me for this. Okay, prices are going bullish from here. Okay, and then you missed out your chance, right? Because you were looking to enter at areas of chocks, right? Again, which isn't bad, but if you know what to look for, then you'll be able to actually profit off of this, right? Obviously, at RoyalBluFX, we would look for more safer ways. We would look for an area of supply like this to be broken, right? And then we would look for something like this. We would ask ourselves, okay, what broke this high here? We see that it was this low that broke that high, right? This is just a continuation to the upside. So we would enter specifically right at this area here, and then we would have a risk just a bit below those lows like that. And then we would target the highs right over here, something like that, right, for a safer target. Now, the reason why we would be taking a buy here is because we see that order flow is pushing bullish here. Let me make this a little more clear here, something like that. Okay, So we would, and the reason again why we're taking this buy here is because the order flow is pushing upwards. So we know that order flow is strong here. We see that this this high here wasn't able to break this low, and therefore the order flow is pushing bullish like this. So now we can take advantage of this buy. Okay, so let's see what happens here. Okay, you can see prices pushing bullish nicely, very nice. Let's see if we hit our TP here. Okay. Oh, we would have broken even on this one, or probably taken some partials out of this one, which is totally fine, right? Again, we would look to see how we can enter in on this trade again. Okay, I do see that another low broke this high, so we would look to take this area right over here. So we would go ahead and enter this market right over. Okay, again, targeting that high again, right? There's not going to be a perfect entry all the time, but if we understand the idea of structure, then we'll be able to profit from these correctly, right? And just waiting for safer, we're just waiting for safer entries to be honest. Okay, so let's see if this hits profit here for us. All right, it looks good. Boom. All right, so we would have profited off of this. So we would have probably had a some sort of take partial here, probably a 5. We usually, our minimum is usually about 5%, about 5% at least, and then we'd let the rest run. Of course, this would be, again, we would enter here, we have at least a minimum of 5% and let the rest run, just for risk purposes, trade risk management purposes. Right, and we'd have hit our TP nicely like this. Okay, so let's go look at another example here just to show you guys how to work off of how to work off of distribution and accumulation schematics. Okay, how to avoid these fake out chocks. Okay, so right here we can see what's happening. There's a reaccumulation happening here, looks like, right over here. All right, it's very small right there. All right, and then let's just highlight that. We understand that's our reaccumulation. Okay, now we want to avoid this, right? We're looking for prices to go bullish still, because this low here has broken this high. Obviously, we're waiting for prices to come back to an area of demand over here. I'm always in the way when I'm trying to do this. Oh, it's still in the way. Excuse me, y'all. Here we go. Demand. There we go. All right. Okay. So now we got to watch and see what happens here. Okay. Let's look. So if we were to look to trade this, right, we would need for prices to break. Obviously, we're not going to just look for buys right in here to try push price bullish here. Now that we see prices breaking bearish here, we know where price wants to go based off of this break of structure here. Okay, and we know that this is the area where price wants to come to, right? So let's see what happens. We can either take a look for a sell or for a buy potentially here. Okay, prices have come in touched here. Okay, now let's go down to our 15-minute and see what happens. Okay, so right off the bat, right here, you can see it. Okay, when price tags our demand right there, you get that chock. Okay, right there. I don't know if you guys can see it. Oops. Nope. Don't want to go backwards. Oh shoot, here we go. Okay, do you guys see all that? Right, there's a chock that broke below and above, right? Price came down, it would have taken you out easily right over here. Okay, this demand would have gone right here, you would have lost this trade. Now the reason why you would have lost this trade is because, well, notice what's happening over here at the highs, right? We have order flow pushing bearish right over here. We have a high, a low, a high, and a low, right? And a lot of people are looking to be quick into these markets to buy right away, just like this. Okay, so let's look at another example, right? We have that chock here, chock high, right? We'd have looked to entered this, right? Something like this. Okay, so this would have been either good or bad depending on what you would have done. This is actually, there's two entries here. There's this entry here, right? And then you have this entry, obviously, right down here. So there would have been two entries for us right over there. Now we would hold this to the upside, obviously, something like this, right, to go in TP to the upside right here, to the high. Let's put that risk to reward here, right? And this is what I'm telling you guys. It's not like every chalk is the worst chalk. You just need to be understanding what is actually happening. The reason why we were safe to take this buy here is because we had our substructure broken right over here. Okay, we had that substructure high broken. Excuse me, it's not there. It is right here. That's our substructure. We had a low broken to the downside, taking out liquidity. Okay, we had the upside broken here, taking out that external liquidity. Price comes very nicely into an area of demand, and then we were able to take that buy. Now this is okay, all right, but when price is standing in the way of a supply and demand, like for example, like here, like how we had this chalk right over here, order flow was still pushing bearish, right? This is where it's due already, the supply, and then price came in hard down here. This would be a safer way to do it because price has already mitigated this high, right? So it's a good indication now that we can look for buys here because we have what's called a strong low over here and a weak high, right? So we now know that order flow is changing direction and that we're looking to push bullish here. Okay, so as we all know at RoyalBluFX, you'd take 5%, and let the rest run and see what happens. Obviously we're just playing this guy so you guys can see what it looks like. All right, my internet is lagging here again. Excuse me for this. Okay, it'll go someday. Don't know when it's going to go. Come on. Anyway. All right, guys. So yeah, and obviously we're playing risk very nicely here. We don't want to be, we're not gambling anything here. We know the reason as to why the market should go bullish here, right? As you all witnessed on when we were on the higher time frame, we understood why this low here had to be, why prices had to come to this low here exactly, right? And why prices should go bullish from here. Okay, so anyway, guys, without any further ado, I hope you guys liked this video. I hope it was a little bit educational, at least understanding why we were teaching you what we were teaching you exactly, right? Please throw a thumbs up on this video if you liked it. If not, please leave a comments below and tell us why you didn't like it. Obviously, we always share free information on this channel. So without any further ado, guys, I will see you.